Hi, friends. It's Roland Kim with Keller Williams in Vancouver and the Kim Buna team, top 1% team in Greater Vancouver. Today, I just wanted to give you a market update for April. We're going to cover a lot of March statistics and take a look at where we are in April and what's trending. So again, this is a market update for the Metro Vancouver area for April 2024. When we look back provincially to the month of March, on this graph, we get to see the residential sales in its entirety in the province of BC for March. So we sold 6,460 units, which was a 9.5% decrease versus March of 2023. The active listings did increased up actually substantially by 26% year over year compared to March of 2023. March 2024 saw us with just under 31,000 active listings in the province. The sales to active ratio is trending up a little bit, slightly outside of the balanced market or right on the edge. With March's sales to active ratio, we're at the top end of the balanced range. We'll see what happens here as we progress into April and May. The average price provincially in March was $1,020,000, which is a 6.2% increase year over year versus March of 2023. When I look at the local real estate boards, the average sales price has increased in every one of those local boards. The unit sales decreased in the Greater Vancouver area, Fraser Valley, and Chilliwack, as well as the island boards. So March of 2024 saw less sales than 1 year prior, and yet prices did increase in every one of those areas. The active listings in the months of supply, looking at the Greater Vancouver Real Estate Board, March had 10,552 active listings, which is a 22.5% increase year over year. So that equals about 4.4 months of supply based on the current sales volume that we're seeing in last March. Yes, last month. When I look at sales trending in April right now, we are averaging about 95 transactions per day. When I average that out for the month of April, we're estimating that April will finish around 2,862 transactions, which would represent a 5% increase versus April of 2023. Still substantially off the previous 2 years to that. We are in a pretty consistent, balanced, steady market at the moment. Unemployment rate has started to go up a little bit nationally. We are on an upwards trend. There's a lot of factors at play right now where I think companies are analyzing their employment load and figuring out how to, make the bottom line stronger for their position. So I do think that unemployment will be playing a factor in the months and next few years, because I think there's more pressure on it to go up versus down in the near term. The CPI, so the Consumer Price Index, just went up slightly. We're at 2.9% versus 2.8% the month before. This long-term graph shows you where we wanted to be in the 2 to 2.5 range that we were at for many years. And then the spike that we saw in 2021-22, and we are working our way back down, but it seems increasingly difficult to get into that 2% range where the government wants our inflationary numbers to be at. Interest rates. Recently, interest rates held at 5%. The next meeting is June the 5th. Many folks do believe that we'll see a price reduction. On that note, when I look at the mortgage rate forecast from the Bank of Canada, we get to see that the variable rate is projected to go down over the next 2 years, a fair amount. The 5-year qualifying rate, the same thing, and the 5-year average discounted rate, which is, the rate that folks are actually seeing, is illustrated on this forecast. I believe it will be a little bit lower than that, but we are seeing the trend towards a lower interest rate market. Mind you, it's not dramatically lower like we saw several years ago, but it is trending lower. And part of that indication of what the future will hold is recently the fixed rates came down sharply. And so that tends to be a significant indicator that, perhaps the June meeting with the Bank of Canada will be the meeting where the interest rates do come down, if not the following one for sure. 3 recent positive changes that have come out with the Canadian government is that the Canadian government will now allow a 30-year amortization period on insured mortgages for first-time buyers purchasing a newly built home. And until that recent change, the maximum amortization period was just 25 years. This will take effect August 1st of this year. Starting April 16th of this year, which was a couple days ago, first-time buyers can now withdraw up to $60,000 from their RSPs towards the down payment on owner-occupied purchases. Previous to that, the maximum was $35,000, and people who have already drawn money, the $35,000 from their RSPs, now have a little bit longer to repay that, up to 5 years in total versus the previous 2 years. Recent changes on capital gains that were announced at the recent federal budget are for individuals. If your annual capital gains exceeds $250,000, the portion of gains included in your taxable income will raise from $50,000 to $66,660. This effect is to take, or this change is to take effect on June 25th. For corporations, all capital gains now after June 25th will be taxed at the inclusion rate of 2/3, 66.66% of your income. So what does that look like in real life? Okay, this graph should show that what if a client sells a property worth $900,000 and they paid $300,000 for it, they have $600,000 in capital gains. Essentially, they will have, after June 25th, they will have a $58,000, 333 more taxable capital gains that needs to be dealt with under the new proposed legislation that will most likely be enacted into royal assent in the weeks ahead. So sales around the province, we can see that around the province, again, all the different areas. Sorry, let me slip through here. These were a few old slides that clipped in. I didn't want to touch on those. We have spoken before that one of the big changes on the building that is happening right now in the province, in the country itself, is more and more of the new units are focus on rentals. So that's a good thing if you're in the rental market. It continues to be a concerning thing for the resale market, as we're seeing, per capita, less new buildings coming onto the market that are meant for the consumer resale market. To that effect, home ownership rates continue to fall. This is the last information is from 2021, comparing it to 2011. And you can see in most areas, the national home ownership rate is decreasing, a trend that continues to move even faster today, a few years later. Continue to mention that, 41.7%, as I mentioned, of all units being created are now going into the rental market. This will have a real impact on what's available for the resale market in the years ahead. Net migration is a real visual story that you can see here on this graph. There is more than 1 million people now moving into the country each year, and that is dramatically higher than what we saw for a long average at around 250,000 per year. What that means is for every new property that is being built in the country at the moment, there is 5 new folks immigrating to the country. Mind you, most of those folks are not adults. However, it is having a huge impact, given the fact that on average in Canada, we build between 250,000 to 270,000 units only. And if you remember the recent national budget that was just announced, the government intends over the next 6 years to increase that average to over 600,000 units per year, a highly unrealistic, aggressive number that has just been thrown out there that is really not tied to any real way of being able to achieve that from resources or time. All right, I think I presented these last month, so we will skip those. So in summary, the real estate market, certainly in Vancouver, Metro Vancouver, and provincially, is stable and steady. We're likely heading into a longer-term, semi-stagnant marketplace, but with higher prices and also a little higher but manageable unemployment. Housing prices, again, will continue to go up. I estimate about a 6 to 8% increase nationally and locally, maybe a little bit more in the Vancouver area for 2024. The story is that housing availability is lacking. High immigration is a real thing that's happening. And these are the biggest drivers right now, forcing our real estate market to continue jogging forward. I estimate that we're going to have future modest rate decreases, This will not have a huge impact on new folks coming into the market, but it will certainly have a small impact. As the rates do go down, more buyers will qualify for a number that they need in order to make the move. Everyone's real estate situation is intimate, different, and I am just a phone call away to help you walk through yours. Love doing consultations, regardless of whether you think you have a buying and selling need in the near term. I'm always available for a quick phone call or to sit down with you. So thank you everyone for listening if you listened this far.